Well, folks, this is Brian Weaver from NSA, VP of Sales. I want to thank everybody for attending today's session. Our webinar today is our number 70 in our professional webinar series with Avalara. The topic today is mastering tax compliance in states with the most complex rules. And as Avalara will attest to during the webinar, those rules continue to change. You get more and more complex. And next slide.
It's thinking, Brian.
No worries. Yeah, so the topics for today's webinar is understanding the new legislations across multiple states and what it means for your business, discovering the most common challenges businesses face when managing sales tax returns, learning tips to reduce the time and resources spent on sales tax returns, and then finally understanding why Avalara is necessary to automate your tax and compliance. And again, my name is Brian Weaver, VP of Sales at NSA. My contact information is there on the screen, and anybody with any questions or that wants to do a deeper dive with Avalara, I would invite to please contact myself or our presenters today. So I'll go quick here. Most of you guys know who we are. We've been in the distribution business as a reseller since 1984. We were Infor's first reseller in the space for what was priorly known as many other names other than SXE and Cloud Suite. And all of our customers are distributors, and it's our area of expertise. Okay, today I'd like to thank both Michael Dominguez, who is the Senior Strategic Alliance Manager at Avalara, and Andy Hall, Sales Executive at Avalara. Worked with both of them for a number of years. They've been a tremendous partner for us, and delighted to have them present for you guys today. So gentlemen, please take it away.
Great. Thank you so much, Brian. As Brian mentioned, I'm the Senior Strategic Alliance Manager with Avalara. NSA is a premier partner of ours. I've been with Avalara 2.5 years, but I am definitely familiar with the distribution and manufacturing space as I ran a large winery for about a decade. And I'll let Andy to go ahead and introduce yourself.
Sure. Yeah. Thanks, Michael and Brian. Thanks for having us on the webinar here today as well. So I'm Andy Hall. I'm one of our sales executives here at Avalara. Basically, what that means is I work with potential clients to evaluate Avalara to see how it could integrate into your day-to-day business solutions to automate tax compliance. I've been in this space for coming up on 8 years in August. Really enjoy the space. Really working with clients here to not only focus and address tax compliance, but also point out areas where there are gaps in compliance as well. It's part of the fun job for me for working in tax compliance, and really just looking forward to speaking with everyone today.
Great. Thank you so much, Andy. So here's our agenda. Pretty straightforward. I'm going to cover the first two topics, look at some recent trends and changes. Going to discuss economic nexus thresholds, but also talk about exemption certificate management. Andy's going to take over the rest, talking about some of those state changes happening in 2025, looking at digital goods and streaming taxation, retail delivery fees, and why Avalara may be a good fit to help you with your tax compliance needs. So we're going to go ahead and jump into it. I like this infographic. It's a lot of data here, but I think it provides a good overview with some of the tax changes in 2025. So we do an annual report at Avalara, and it was just released a couple months ago. Some of the major outcomes are 11 states planning to reduce their income tax, 12 states planning to reduce personal property tax. So what does this mean, right? Taxes is always evolving and changing here in the United States. What the report showed is that there may be a decrease in some income and personal property tax, but there could be an increase to sales tax as states look to bring in the major source of income within their states. So I'll talk about this later, but it's just important to keep in mind that about 30% of a state's revenue comes through sales tax. So it's a major part of how they keep their governments going at a local and state level. And there's also a piece here, just so you all are familiar with the 24 states that are members of the Streamlined Sales and Use Tax Agreement. And you could just see the number of sellers that have registered through the Streamlined Sales Tax Registration System, at over 30,000 sellers. Okay, this slide may be a little complex or hard to read. Sorry with the formatting, but it just really just shows the number of different tax and sales and use tax jurisdictions, over 13,000 in the United States, and also gives you an update that there's almost 100,000 US sales tax holiday rules updates, and that's just in 2023. There's a lot more now. And so you could just see the complexity within the United States, not only with the sales and use tax jurisdictions, but the number of different US sales tax holidays and rule updates. You're looking at 39 sales tax holidays across 19 states. That
Yeah,
gives you,
Michael,
sure, go ahead,
sorry.
Andy.
Yeah, I was just going to add on to that slide. I really love that slide. It really packs a lot of information in. But when we have conversations with clients that are looking to address, tax compliance, some of the things that come up in every conversation is, certainly the 13,000 tax jurisdictions. That's crazy. It used to be you go by zip code, here's your tax rate. Now, one zip code could have, five different tax rates just depending on where that exact address is within that zip code. So that's one that always gets some eye-opening wows right there. And then additionally, that 11,000 tax rate updates. Every time we jump on calls to just kind of learn more about businesses, one of the things that comes up is, the tax rates and how are we updating tax rates? Who owns that responsibility? Sometimes there's some shoulder shrugs. Sometimes there's well, IT does that, and their response is always it's a pain in the butt to do. And so when we talk about there's been 11,000 tax rates, is IT updating the tax rates in the ERP system 11,000 times a year, or are we just doing some shoulder shrugs because we don't know when the last time it was updated? So those are usually things that come up in conversations. So really like this slide, and then kind of incorporating the sales tax holidays again, something to not overlook, as part of the reason why states have these tax-free holidays is to get people out and spend more, and our system's able to automate and recognize those tax holidays that states are implementing as well. So that's all I just wanted to mention on this slide, because it does pack a lot of information, but just wanted to walk through it in some real life scenarios there.
Great, thank you, Andy. Okay, so now we're just going to do a refresher on some economic nexus thresholds. It's actually 6 years ago, the Supreme Court ruled in favor of South Dakota versus Wayfair Act. So prior to 2018, basically, a business had physical nexus, or they had to collect and remit sales tax based on physical nexus. But since that ruling, now businesses are responsible for if they're doing business in different states and if they're meeting certain economic nexus thresholds. And I'll get into the different states and what those economic thresholds are by the amount of purchases and also by the number of transactions. So you can see here's some updates that are included in our 2025 Avalara tax change report. You can see here in Indiana, SB 228 removed Indiana's 200 transaction threshold retroactive to January 1st, 2024. In Wyoming, HB 197 removed Wyoming's 200 transaction threshold effective 1 July 2024. And this just kicked in here on the 1st of January, but the Alaska Remote Seller Sales Tax Commission dropped Alaska's 200 transaction threshold again on January 1st. And then in New Jersey, the bill 63 S3604 is seeking to remove New Jersey's 200 transaction threshold. So again, remote sales tax compliance isn't getting any easier. You saw all the tax and rule changes that we see at least 11,000 a year. Again, those 13,000 sales tax um, jurisdictions. The requirements for economic nexus are constantly changing, whether it be that economic threshold on the amount of sales or the number of transactions. And Andy will touch on it a little bit later, but we do have a free Avalara sales tax risk assessment that goes back a year because a lot of you are businesses may be wondering, where do I have economic nexus now? Especially if you're expanding geographies, your business is growing, or perhaps you're also adding B2C in addition to your B2B business. Oh, sorry, go back here. All right. So when we talk about sales tax, some of you in the audience, mostly distributors, are probably thinking, well, I don't collect and remit sales tax. But it's very likely that you do have an exemption certificate management obligation. You can see on this chart here the difficult taxable transactions in exempt sales states. But what we're seeing across Avalara, at least, is that while the number of audits hasn't really changed, we are seeing auditors focusing more on whether or not companies are managing their exemption certificates, making sure that they're having exemption certificates on file, especially if you are obviously like reselling the products. Did you want to add anything to this slide, Andy, about exemption certificates?
No, I mean certainly the importance of exemption certificates I think will really kind of show in the next slide here when you start to see the thresholds and what the thresholds are. But to the state's eyes, if you're not collecting an exemption certificate, they're going to view everything as taxable. And if anybody here has gone through an audit, certainly you understand the process of requesting an exemption certificate, applying that as a sample size, and let's say you're missing certain percentage of exemption certificates, then they'll assume that that certain percentage should have been taxable, and vice now you're looking at penalties and interest and everything above there. So really important to monitor nexus, but also monitor the exemption certificates when you collected them. Are you updating them? Have you verified them? Those types of things, which our solution's able to do and automate some of that process for you.
Great, thanks, Andy.
Yep.
And so this is a slide that Andy's talking about. You could see it varies with the different states here. Like in the larger states, California, New York, Texas, there is that larger economic threshold of $500,000 in sales. And then again, as a reminder, each state is different, right? They'll have different thresholds, whether it's through the amount in dollars of sales or if it's in the number of transactions. A couple of key ones to point out is that Connecticut's threshold is a gross receipts of 100,000 and 200 retail transactions. New York's threshold is 500,000 and 100 transactions. So again, this multicolored map just should like cause you to just think about what states you're doing business in. And again, if you're expanding, to really assess where you may have economic nexus where you thought you may not have had in the past.
Yeah. And to share again, kind of going back a lot of information on this slide, but kind of break it down into more relevant real life situations or scenarios. I've worked with companies that were, only registered in places that there was physical presence, but we were exceeding some of these thresholds in other states, not collecting exemption certificates, not collecting sales tax, not remitting sales tax, selling direct to consumer in some cases. So, it's important to recognize the economic thresholds, which Michael, you had mentioned the SST governing board earlier on in the conversations and one of the slides. Avalara is actually certified by we're a certified service provider for the SST program, and basically what that means is we go through an audit every 3 years, I believe, just to make sure that our our system, our solution does what we say it does, automates tax compliance, guarantees and accuracy tax rates. And by doing that, if you partner with Avalara, and you need to get registered in some of the 24, 25 SST member states, going through Avalara, we can actually do that at no cost to you, as well as the returns as well. So really important to just mention that relationship that we have with the SST governing board, but also some of the implications that can come up if we go over these thresholds and aren't collecting sales tax on the direct to consumer goods, because that'll lead to penalties and interest, but also not collecting exemption certificates to B2B sales, because in the state size, without that certificate, they'll be taxable.
Yeah, that's a great call out with the SST program, Andy. And again, if you all want to know what states, we're SST certified in, we'd love to just have a conversation with you, because it's a lot of states, right? And if you're a growing business and you have, let's say, more than 10 or 15 locations, it may be in one of those states, and it may be a program that's worthwhile to look at. Okay, I like putting this slide up because, again, as I mentioned, about 30% of a state's revenues comes through sales tax. And so they're going to want to get that tax. And so they do sales tax audits. And what this slide is really showing is that, these states will focus on non-compliant businesses. And just here's some of the ways they do it, right? A state could hire more auditors. They could share information with other states to target non-compliant businesses. Everyone's talking about AI, right? So state auditors are probably using that type of technology to identify non-compliant businesses. There's perhaps an increase in out-of-state audits, potentially even encouraging some type of whistleblowing activity. And just keep in mind that they could also be focusing on audits that may have occurred in past years. So depending on the state statute of limitations, that could be anywhere from 3 to 8 years. So just want you all to be aware of this as businesses, and just some of the approaches that state auditors are using to try to make sure that they are recuperating some of those sales taxes that may have not been filed like they should have been. And then I really like this slide when it comes to running your business, right? So I use these as like key indicators. Like if your business is growing in the distribution space, your compliance complexities are probably increasing as well. So think about if you're expanding into new states, maybe even new countries. Again, if you're one of the businesses that are primarily focused on B2B, but now doing some type of B2C activity, or working with different marketplaces. Obviously, you all are dialed in with the right folks here at NSA, looking at technologies and how to automate and just be more efficient when it comes to calculating your sales tax and filing your exemption certificates. And then obviously another one I like to point out sometimes is use tax if you have any requirement for understanding, and we can help you manage those risks as well. Okay, so this is kind of a little bit of just like a case study or like an example. We talked about Nexus, we talked about economic thresholds. We thought Andy did a great job of pointing out, real life scenarios, how this impacts business, what he's seen on the ground, talking to businesses. Again, I'm just going to foot stomp here that exemption certificate challenges could become a cause of negative audit filings, right? So missing or incorrect documentation, like Andy said, if companies aren't collecting those exemption certificates, aren't making sure that they're up to date or filed, it could result in some type of audit, some type of penalty. So we do have a quick example here, and then I think I have an example on the next slide of the result of missing one exemption certificate. But in this example, let's say a company's total revenue is 10 million, 90% of your sales is to tax-exempt buyers. If an auditor finds a 30% error rate in the exemption certificates they review, they'll multiply that error rate across your annual revenue. So at a rate of 8.25%, your business could owe $227,000 in sales tax not collected, plus fines and penalties. That's a big bill, right? So all distributors must deal with exemption certificates, the sales tax exemptions, and those incentives, because they are often very industry specific. And this is specifically focused on the distribution industry. So now we're going to run through the cost of a missing exemption certificate. I like just going through this example. It's the cost of missing one exemption certificate. So keep that in mind. So let's think, okay, your business is going to be audited. They're going to go look at a 1 month sample for an audit period of going back 3 years, right? So the auditor finds a sale. It's missing the invalid certificate and resulted in an uncollected tax revenue of 8% or $1,200. The auditor assumes this amount of uncollected tax for each month during the audit period. So if you do the math, that uncollected tax fine is calculated at $1,200 times 36 months or $43,000. So this is an example of a single missing exemption certificate costing your company $43,000. So now I'm going to hand it over to Andy, who's going to talk about the top state tax changes in 2025.
Yeah, thanks, Michael. So when we look at the tax law changes, and again, I'm not an accountant, I'm not a certified CPA by any means, so I don't really keep up with the tax rates, but our tax engine does. We've got a group of about 200 individuals that anytime they get notifications from the state, they're updating those tax rates within our cloud system that would and then communicate to the ERP system. But when we look at some of the tax law changes most recently in 2025, I think some of the slides that we showed earlier were, you know, um, around 13,000 tax law changes last year. Some of the ones that stick out, and while the slide shows manufacturing, wanted to bring this up because we've uncovered that more and more, distributors are taking that, kind of hybrid approach where they're pretty much doing both manufacturing and distribution of products and services. And so there's actually a case in North Carolina that went up to the Supreme Court over, uh, you know, properly attaching an exemption certificate to products made, and so those are big. When we start talking about the research and development for tax credits in California, that's a big one. Especially when we talk about California and some of the complexities that they have, onboarding here at Avalara 3.5 years ago, one of the things that I had to do was to take a California return and then try to do it correctly. And then it was like taking line 4, putting it on line 7, taking that number, putting it on line 15, dropping it down to 22A, subtracting it. You guys get it. It was confusing. I just closed my computer and submitted what I had. But companies don't have the luxury to do that, right? And so and then what happens when those laws change? Not listed on this slide. There was a tax law in Illinois that just recently changed. That's been a big one. Is that it took Illinois from being a origin-based tax state to a destination tax base state. So basically, that means that the product's no longer being taxed on where it's being shipped from, but where it's being shipped to. So those are the tax laws changes that companies should be aware of that can certainly surprise you and then add different complex layers of complexity to your current processes. When we look forward at the next slide, Louisiana is one of my favorite states, not my favorite states or clients' favorite states. It was more so just it's my favorite state because there's more to talk about New Orleans or Louisiana. But when we look at Louisiana, they are changing their tax rate from 4.45% to 5% beginning January of this year. And then additionally to that, there's within Louisiana, there's different parishes. So again, when we start talking about the 13,000 different tax rates and jurisdictions within the U.S. alone, let's look at Louisiana. They've got an increase in their state tax rate, but then you still have to take into consideration all the parishes, the cities, the counties, municipalities. Are their tax rates going up as well to kind of keep par with the states? I don't know the answer, but I'm sure the other 200 people that their job to update tax rates do. So certainly just keep that into consideration when having IT update the next round of tax rates within the ERP. So when we start looking at the taxation on digital goods, this is a big one. Again, everybody's streaming now, everybody's adding commercials now, or different types of advertising and streaming. And so states are starting to open up the loopholes or the conversations to say, hey, why can't we start taxing streaming services now? So if we're, you know, advertising on streaming services, or if we are um, doing any type of streaming software that we're selling in states, like those can certainly be applicable to new tax rates. Moving on to the next slide here, when we look at digital goods, again, Louisiana's popped its head up again. Digital audio works, digital books, digital applications and games. Um, so when we start looking at varying taxabilities, again, the taxation on digital goods is one that's definitely going to be growing in more and more states. In my home state of Georgia here, we can see that um, they've started a taxing select on digital products from January 2024. So I didn't even know about that until reading the slide. So again, that's something that's going to affect me as a consumer, but again, it's going to affect the people and the companies that I'm buying from. So again, just a quick example of some states that are starting to incorporate taxations on digital goods and services, and then kind of point out one of the slides that Michael had pointed out earlier with the states that are dropping their transactions thresholds. Again, states are changing their laws. They're changing them frequently. Who's to say that for too long they don't have that $100,000 threshold and they drop it down to 50,000? Again, I don't know, but those are things that companies and organizations should be aware of as they continue to grow out and expand into other territories and states. The tax delivery fees on delivery or retail delivery fees was big. Colorado, I think, was about 2 years ago. We started getting calls from people saying, "Hey, we got a notification from Colorado that they're going to have this delivery fee." And so again, Avalara had to put that into our tax engine to recognize that when you know, distributors are going to be um, delivering goods and services and products, that our tax engine could apply that delivery fee. Minnesota, which is where I'm at currently today, has imposed a 50 cents retail delivery on orders totaling more than $100. And then again, as we start saying, if one's doing it, two's doing it, more are going to follow suit. So the right hand, you can see some future states that are considering and weighing their options to impose delivery fees, which again is going to affect everybody. As I'd mentioned, Colorado led the charge on the delivery fee. Really left a lot of companies and organizations struggling to try to figure out how they were going to incorporate that into their business. Colorado is again another one of those fun states, not fun to be in, but fun in the sense that just like Louisiana has their different parishes, Colorado has their special home rules and special tax jurisdictions where it starts at state, city, county, local municipality, arena tax, transit tax. You could have seven different line items of tax once you start getting to Colorado, and then you got to add that delivery fee on top of that. So again, something that with our services you won't really have to worry about maintaining the eyes that you really need to make sure that you're not going to be subject to any of the 13,000 tax law changes that happen every year, basically. So when we start looking at state and local tax law changes, and again, this kind of goes back to one of the questions that I had brought up earlier in real life situations of tax law rates change, state law tax rates change. Who's updating them? I don't know, or IT does it. Well, when does IT know to update the tax rates? Do they get a notification? more likely the notification gets sent to the business headquarters. Um, and again, I don't really know what happens from there. Once those notices get sent out, again, we have a team of 200 people that their responsibility is to manage that. But again, states are changing rates in the middle of the year. They don't wait until the end of the year. They can do it in February. They could do it in March. They could wait until June. It just depends on when they want to change these tax rates. And they send out a notice. If you don't make those updates within your system and you're not charging enough tax, they'll come back to you for that if you're short paying tax on sales orders there. And so really the question is why do I need Avalara, right? I think most people on this call have gone to some of the tug conferences, which if you're not going to, I believe it's in Austin here in a month, really looking forward to meeting you. If you are going, definitely reach out afterwards. We would love to set up some time maybe to meet while we're there. Loop in NSA, we can just set up some time to meet as a large group, since we do have that great working relationship between us and NSA. But again, I think when we start looking at Avalara, everybody recognizes the orange one, and then they go, oh, those are the tax people, right? But you know, we started out as a company 21 years ago to be that tax determination company. At that point, it was just as simple as tax rates. But now when we start adding on to core products that we've either grown organically or through acquisition over these last 21 years since Avalara was founded, we've added our exemption certificate management solution. I think this is probably the biggest need for, or solution needs for companies in the manufacturing and distribution space, because they have so many tax exempt entities and customers that they're working with. So being able to leverage the solution to maintain, automate the process of getting new certificates, validating them, verifying them, very helpful tool that does integrate to our Avatax solution. And then we start talking about filings, reports, registrations, returns. Those are what we consider our three core solutions and products here at Avalara. Supporting solutions and products that we offer. We have a tax research solution. So if you find yourself going on Google and typing in what's the tax rate for this product in this state, or how come this software was taxable at 60% in Utah, but 30% in Alabama, those are real laws on software. We have a tax research solution that can work with that. Increasing with cross-border, e-invoicing, VAT tax calculations, reporting, HS classifications, item classification codes, various integrations that we have. Certainly I think most people on this call are running on Cloud Suite distribution and for Cloud Suite distribution or SXE. We have pre-built integrations for those. If there's various e-commerce platforms that we want to have interest in integrating point of sale solutions, which, that's another thing to keep in consideration. The Cloud Suite distribution has a point of sale functionality within its system, which can really help out when we start looking at the cost of our solution, because we do price point of sale a little bit different than shipping anywhere, but we can talk about that on another call. And then our managed services and professional services for the streamlined sales tax governing board that we've already talked about, sales tax risk assessments. We are offering a free standard risk assessment, which will just do a 1-year look back, determine if you triggered Nexus anywhere in the previous calendar year. Our premium risk assessment does a 5-year look back. And in addition, with that 5-year look back, it'll determine when and where you triggered Nexus, what your potential penalties and interest could be once getting registered into a state. So if you have concerns about that, we can certainly talk about the premium risk assessments, and then ongoing support, training, and implementation services to get you live on the solutions that Avalara offers. So more than just the tax company. Said a lot there, but certainly reach out. 1099s, if anybody has any questions, is another one that's been pretty popular lately. When we start looking at tax compliance for clients, again, since coming to Avalara, 3.5 be 4 years in August, I've been working specifically with our N4 team here on both the manufacturing and distribution side. Being able to offer integrations to the ERP systems is very valuable. I think when we go to, the user groups and tug and, CFO roundtables, it's always surprising to see, real life stories. And here's a perfect case study with Cramalot. If you're interested, we can send you over the case study on that one. But really how hearing from like a controller or CFO on how our solution was able to make the day-to-day process easier, how it was able to drive efficiencies and help companies stay compliant. Those are great things that we certainly like to share with our N4 users that we've, I'd say we've probably got over 400, 500 N4 clients across both manufacturing and distribution. So, yeah. Here's the promotion that we're running for the risk assessment. So everybody pull out your phone real quick, scan the QR code if you're interested in taking advantage of the free risk assessment, which is that 1 year look back. If there are concerns, maybe after the 1 year look back, and certainly after we do that 1 year look back, we'll provide a full detailed analysis of the obligations. We can set up some time to review that with somebody from our professional services team, discuss possible, concerns. If there's, potential risk from 5 years back, we could certainly talk about the premium risk assessment and the value with our voluntary disclosure agreements, our VDAs, if that's something that would be of interest to anybody as well. All things that we can talk about. So scan the QR code if you're interested in learning, just getting that free risk assessment. Scan this QR code. I believe this goes to my direct calendar. If not, there's my email and contact information. We'll send it out after the call here as well. But again, if you're going to be going to the TUG conference here and just right at a month or just over a month, definitely let's schedule some time to meet up while we're there. Would love to meet in person and really just have an honest 20-minute conversation on areas that we think that we could be helpful for. I think with that, we'll turn it over to some poll questions. Is that right, Michael?
Yeah, I have the slide in here. I don't know if it's going to allow me to execute a poll or not, Andy. But we'll be following up, Brian at NSA, with the recording and this slide deck. And if you all have any questions, please feel free to reach out.
Yeah, and I'd like to certainly thank Michael and Andy for the presentation today. I would invite anybody with any questions, please enter them into chat as we talk just a little bit here. And Michael, I'm wondering if you can maybe pull up the promo again for the assessment. I do want to talk about that a little bit. So anybody that is on this call that is not already an Avalara client, to me, this is a no-brainer, and we really appreciate Avalara stepping up and offering this promo, for the webinar. It's a no-lose proposition, right? Better Avalara doing the risk assessment than having the tax man come in and find those issues. This gives you an opportunity to understand if you're at risk and what you can do with Avalara to go ahead and correct them. But we'd ask that you again scan that QR code and make sure you do that. Both NSA and Avalara, of course, will be at TUG again this year. We hope to see anybody that is going to attend. Please make sure that you stop by and see us. NSA has multiple breakout sessions. Avalara has breakout sessions as well, and we hope to see you there. Other than that, like I said, please contact us so that we can not only conduct the assessment for you guys, but also roll the sleeves up and determine what the best solutions might be among the Avalara stack. With that, I'm just going to leave it another 30 seconds or so here to see if we get any more questions that do come into the chat. And with that, I'll just mention quickly to Michael and Andy, any final thoughts you guys might want to add to the session today?
I don't, Brian. Just grateful for the opportunity to present and grateful for you as our partner. And again, like Brian mentioned, take advantage of this sales tax risk assessment if you have any type of Nexus questions. Like you said, it's better to have us help you and instead of an auditor. So, Andy?
Yeah, no, just one thing that Brian had just mentioned with the risk assessment for new customers. If you're somebody that's on the call that's already an existing client of Avalara, and you're interested in a risk assessment or potential Nexus concerns, still reach out to us. Let us know. We can direct you to whoever your account manager is to set that introduction. So that way, if there are concerns, we don't want to focus just on new clients, but certainly maintaining relationships with our existing clients as well.
Great. Thank you both, gentlemen. And again, guys, this session has been recorded. We will get this out to everybody within about 24 hours or so. Certainly appreciate the time you've taken today to spend with us on this webinar, and hope you take advantage of the very nice risk assessment that Avalara is offering, and hope that you might be able to have a chance to see you guys, anyone that may be attending TUG. With that, I'm going to give you back 20 minutes of your time for this hour, and I want to thank everybody for attending. And that's a wrap for today. Thank you.
Thanks, everybody.
All right. Thank you.